Now, if you check out IFAST Corp's share price, you'll be astounded. It's shot up tremendously in the last couple of months. Now, part of the reason is because operationally it's done fantastic. Let me pull this out for you to see. This is a recent announcement for third quarter 2020. And a lot we're comparing against the previous year, 2019. And what can we see in this announcement? The green line underlines the net revenue is actually grown 35.7% year on year. Wow, that is fantastic. And before you celebrate too much, let me show you. Net profit is actually grown 150.6%. Revenue growth 35.7%. Profit growth 150.6%. That means margins have shot through the roof. And indeed, this following chart will really explain how things are going. Because in this 2020, this pandemic, a lot of companies are suffering in terms of revenue drop, margin compression, etc. etc. So for a company to show good revenue growth, good profit growth is really quite special. So again, the margin charts, let's pull this up for you to see. Profit before tax margin for the group. What do you realize in the parts that I've circled in yellow? This 35% is never seen before. Fantastic performance, because when margins are good, profit is good. So ultimately to shareholder is the profit, it's not really the revenue. Profit is good, you benefit because dividends can be increased. So as the next part, you'll be thinking, where is contributing to margins? Why is margins never seen before at this level, and will it be sustainable? The truth is margins will increase and decrease according to the composition of IFAST, what's contributing to it. And IFAST has two main spaces of making money. First is the platform fee. The second is actually in terms of sales charges. So indeed, the sales charges part is where it's likely to the bigger margin portion. This actually shows how things actually work. Net inflows and subscriptions excluding switching. Switching is when someone buys unit trust and just changes funds. So it's not really new asset under administration. So net inflows and subscription is actually sales. Sales is where it's the most profitable in terms of margin wise. Never seen before this kind of levels. And that's really contributing to the fat margins that IFAST is receiving for this year. Now, understanding this is very important because that also tells you when margins will compress, when net inflows are drying up, or rather there's net outflows, you should expect margins to really compress. So it goes two ways, but as of now, IFAST is really seeing fantastic numbers in revenue and profit. So I'm going to give you further details as to how to understand the business. So that's why I prepared this for this. 2017, IFAST actually was dominantly in unit trust sales, 92.5%. And not only that, Singapore is the main contributor, 68.3%. But today, things are looking a little bit different. Let's pull this up for you to see. You realize that Singapore is still the dominant contributor. Singapore is still around the 67% mark. But the interesting part that I'd like to highlight to you is Malaysia. Malaysia is growing in terms of its pie. So that part I'll highlight a little bit further down the road for you. And in terms of understanding the breakdown of products, do you remember previously I mentioned 92.5% was unit trust, but right now, just mere 3 years later, this composition has shaped drastically. Bonds is contributing significantly, 6.8%, and stocks and ETF is contributing 11.1%. So I'd like to highlight some things about bonds, because bonds is where IFAST, in my opinion, has really created an interesting solution to the market. Traditionally, bonds are traded by private banks. They are over the counter, which means retail investors or everything is not so easy to deal with. So Bondsupermart is really an innovative solution coming into the marketplace to make it more transparent, to encourage bond trading. So what do we see from this chart over here? Transaction volume for Bondsupermart has grown by about 20 to 30%. Fantastic innovation and showing fantastic results also. So keep an eye on bonds, keep an eye in terms of ETF and stocks, because these two components are really growing in IFAST asset under administration. So as I promised to you, explaining how Malaysia actually works. This is actually a profit and loss statement for third quarter of 2020, a geographical breakdown of things. Singapore, I've highlighted in yellow, is still the dominant contributor. Singapore has done a good number. Maybe I've contributed to IFAST's good number for Singapore. That could be the case. Hong Kong has grown a little, but Hong Kong, in my opinion, always feels very competitive. A lot of Chinese players there. That's why Malaysia is always that interesting pie that I've always hoped that IFAST can grow significantly. And indeed, if you look, 2016 is 0.38. million in terms of profit, but right now it's 2.81 million in terms of profit. So Malaysia has a lot of room to grow. Malaysia's population is several times of Singapore, so hopefully IFAST can grow its Malaysia's operations significantly. Now, what about for China operations? Do you realize IFAST always reports ex-China numbers simply because China operations are still floundering? If we try to analyze this number, it's still going to be roughly the same, 4 point something million in terms of loss. So IFAST still hasn't found a way to turn around the China operations, and they haven't indicated whether they'll be selling the China operations or what they can do with it. But as of now, that part is still stuck. So hopefully Singapore, Hong Kong, Malaysia continue to grow and continue to contribute profits to the group itself. Now back to the point on the share price. Let's pull out the chart for the share price, just in case you haven't seen it. This is the spike in terms of share price. If I'm not wrong, this could be one of the best in terms of share price. Maybe glove companies are doing just as well. I can't think of many other names that have shown this kind of share price climb. Very significant. Start of the year, January is about $1. Right now it's $3.55. As of this time you're viewing it, maybe it's $4 already. I don't know. There is a lot of hype to it. And if you look around, analysts, what are they suggesting? The first is actually Hong Kong. Hong Kong part, there's a project to digitalize the mandatory provident fund. This, from my layman understanding, is like CPF of Singapore. It's a retirement fund, and if IFAST gets a part of this project, definitely there's going to be revenue and profit to be driven to the group itself. I have no idea of the chances. From my layman perspective, Hong Kong is competitive. Not too sure if they can get it. The one which I think they have a good shot is the digital bank. If you followed this channel, I've mentioned digital bank before. In comparisons to what kind of offerings they are going to come out in the market, as well as IFAST having this prospect in the previous video on digital bank. And now as we move to the end of 2020, the news is going to be announced very soon who wins digital bank. IFAST is up against quite a few big competitors. They have only submitted for the wholesale bank. And in the wholesale bank, there's going to be 3 of them awarded. IFAST, if they snag one of them, is really going to revolutionize the business. And if you look at who they're partnering with, Yillion Group and Hande Group, these companies have knowledge in building digital banks. So they have actually a very nice proposal, in my opinion, submitted to MAS for evaluation. And if they do win, they can really revolutionize the business. How? Do you know IFAST actually offers products with leverage, unit trust with leverage. But right now, it's partnered with a third-party bank. But moving forward, if they snag the wholesale bank, they can actually in-house this, which means they can make money from loans itself, like a traditional bank. So that really could add on new profit, new revenue streams to the business. So fantastic news. Hopefully they win it. Market is expecting a lot. The market is really pricing in a lot of this chances itself. So the next question maybe thinking is it a good time to be buying IFAST or not? Maybe I'll give you my quick answer because maybe you stayed on to hear you're expecting something along the lines. For my own, I'm not buying IFAST as of this price because I can't justify a 3.5 times more than January's price. Operationally, they've done fantastic, but what if they don't win the digital bank? I already own IFAST shares. I'm really involved in it. So if they don't win, I expect prices to really reflect that negative sentiment. That's just logical. So buying into the hype now has some risk. I would advocate you to seriously consider whether you don't have this fear of missing out, because that's very important. There's always a good chance of buying a good company like IFAST down the way. If you miss the spike, look for better chance. That's what I've always advocated. Don't have this fear of missing out thing. And just in case you haven't seen the previous presentation of IFAST, let me pull this up for you to see again. That really runs through IFAST operations. Invest in IFAST because you believe in business. That's what I would suggest. And that tutorial really suggests more information that can help you decide if IFAST should be part of your portfolio. With that, I'll sign off. I'll see you in that video. Take care and goodbye.